What's up traders? In this video, I will be performing a market forecast on EUR/USD. So stay tuned. Now this video is going to serve as my outlook for EUR/USD for the month of July 2024. If this is your first time watching one of my market forecasts, the main purpose of these videos are to show you guys how I go about establishing a directional bias and then how I look to identify potentially higher probability areas to trade from in line with that established directional bias. I focus on the weekly, daily, and 4-hour time frames so that the analysis shown in these videos remain relevant throughout the month. Now, as always, we're going to kick things off here on the weekly time frame, but we're not going to spend too much time on this time frame because there has been very little price movement since our last video at the start of June. In fact, the only price movement we've seen this past month here from a weekly point of view is this price action in here, which, as you can see, hasn't really impacted our overall analysis on the weekly. So we are still trading within this large weekly bearish range. We have our last major bearish break of structure here, with these being our major weekly structure swing points. We do have our internal structure pointing bearish, denoted by this most recent internal bearish break of structure, and that has obviously allowed us to establish our weekly internal range, which is a bearish one. And from a weekly point of view, the overall objective is still a violation of our weekly weak low down here. Now, focusing in on more current price action, this weekly supply zone is still a very important area of interest for me. We can see that it forms part of a weekly supply chain which sits at the extreme of our bearish internal range. My anticipation for this time frame is price action could potentially be looking to trade towards this weekly supply before we potentially see a resumption of our internal bearishness and our overall weekly bearish continuation, because we have already seen our weekly pullback come into the EQ of our weekly range, and then after that internal shifted bearish, that has now potentially signaled the start of our bearish continuation phase. Now, obviously, in order for price action to reach this weekly weak low down here, we would first need to see a violation of our weekly internal weak low. After that violation takes place, our next sell target would then become this previously unmitigated weekly demand zone, where we would anticipate just a potential short-term bullish reaction before possibly seeing a resumption of that underlying bearishness in order to then go ahead and violate this level. Now, if this weekly supply fails to hold, that would leave our weekly internal strong high here vulnerable to being violated. And if we do see a violation of that internal strong high, that would open the door for a potentially deeper overall weekly pullback, potentially up towards this weekly supply zone, which sits all the way at the extreme of our much larger weekly bearish range. And if we now drop down to our daily time frame, we will then be able to see that weekly internal range a lot clearer, because that weekly internal range is our daily range. Remember, the relationship that exists between internal and external structure, our internal structure comes together to facilitate our weekly structure. And in this case, our daily structure is coming together to facilitate what we see on our weekly. And so here we can see our most recent daily range is a bearish one, with our last major break of structure being this bearish break here. We can see our major external daily structure swing points here. We did have a period where price action was creating higher highs and higher lows from a daily point of view, and that was when we were experiencing our weekly pullback. But then after creating this new higher high, price action rolled over, violated this higher low, and created a new lower low. And so that was the point at which our daily structure shifted from bullish to bearish to potentially signal the start of our weekly bearish continuation phase. Now, if we come back to our most recent daily range here, we can see that we did have that pullback obviously into premium of our daily range. Price action tapped into this weekly supply, and then our daily internal structure shifted bearish here. So once that daily internal structure shifted bearish, we then obviously saw the end of our daily pullback, and we then saw the start of our daily bearish continuation. And so now the current overall objective of this daily range is a violation of this daily week low down here, which sits at roughly 104,480s. And so then the question becomes, how is price action likely going to go about violating this daily week low, which is our overall target? If we focus in on our internal structure, we can see that our internal structure is bearish. And that means that our daily bearish continuation phase is taking place. We then want to identify areas within this continuation where we can look to get involved in a move. So focusing in, first of all, on our most recent internal range, we have our bearish internal range here, with this being our last internal breaker structure. Because of the fact that that is our established internal range, the current objective of that internal range is going to be the violation of this internal week low down here. Now, when we performed our last market forecast video at the start of June, price action was hovering at this point in here. We had just seen a sweep of this daily supply zone, and we were anticipating, because of the nature of price delivery, a resumption of bullish pressure, which left our daily internal strong high vulnerable. This was supported by the fact that the main area of interest from us from a weekly point of view was this large weekly supply zone up here, which forms part of that weekly supply chain. And if we fast forward to current price action, we can see that price action did try to continue with that bullish pressure, but our NFP news release here from June the 7th, 2024 had other ideas, pushing price action lower. And so now, going into this month of July 2024, our overall target still remains a violation of our daily week low, and this weekly supply zone that sits here still remains a very important area of interest for us. However, the price action that printed during the month of June introduced this daily supply zone here, and this daily supply zone is our next immediate area of interest. Now, depending on the type of trader you are and the type of trades you like to execute, this scenario can be viewed differently. First of all, if you are someone that likes to position trade or swing trade and you hold trades for days or weeks at a time, your main focus is obviously going to be this weekly supply zone, and you're going to be viewing everything below that weekly supply zone as just potential liquidity being drawn into the market, which includes this daily supply that we've just identified. However, if you are more of an intraday trader that looks to hold a trade for a shorter period of time, just for a particular session, you're going to be looking at this daily supply as an area where you are anticipating a reaction, and that reaction can then give you an opportunity to potentially take a couple of profitable trades. Because one of two things can happen at this daily supply. Number one is we see a mitigation and a resumption of our internal bearishness, which will initially look to target the internal week low and then ultimately our daily week low here. Or number two, we see a mitigation, just a very short-term reaction before price action potentially pushes higher to target this weekly supply. And once that weekly supply is mitigated, we could then see the actual bearish resumption. And so this is why this daily supply zone is a very interesting area, and one that I want to point out because it does offer an opportunity to get involved in the market, but then it also adds to the significance of this weekly supply. And so if we now drop down finally to our 4-hour time frame, and if we focus in on what price action is doing in here, we obviously have our daily supply zone, but zooming out very quickly, our 4-hour time frame is regarded as our daily internal structure. And so that is why we have our 4-hour bearish breakout structure here, which allows us to establish our bearish 4-hour range. And we can see that our 4-hour strong high sits just below our weekly supply zone. And that 4-hour strong high is obviously our daily internal strong high. Now we did have our 4-hour pullback, which came in to sweep this daily supply. And then after price action swept that daily supply, we had our internal structure shifting bearish here. Now there is a gap in price action, but we can see that we have a follow through of price. So our internal structure shifted from a bullish market state to a bearish market state in here. And that internal structure shifting bearish here was our indication that our bearish 4-hour continuation was possibly taking place. If we zoom in just a little bit closer, we had another bearish internal breakout structure after this internal pullback that gave rise to this bearish internal range. But then after our internal pullback came in to mitigate the EQ of this internal range, we can see that price action failed to generate a new internal breakout structure, and it failed to create a new internal lower low. Now, once that occurred, once price action mitigated the EQ, and once it failed to create a new internal lower low, this lower high was then left vulnerable. And once price action violated that lower high, we then had the option to apply our FTC model. Now, the FTC is literally just a variation of a change of character. And by applying that FTC, we then went from this very large internal bearish range, which failed to create a new lower low, to now a bullish internal range, which looked like this. Price action then shortly followed that up with another bullish internal breakout structure, and that has now created the 4-hour internal strong low that we see here, as that is the starting point of our internal breakout structure. Price action is now interacting with 4-hour supply, which sat at the extreme of this initial bearish internal range, and we have yet to see our internal pullback taking place, which is why at this point in time we don't have our 4-hour internal week low marked out just yet. It is important to note as well that with the FTC model, you do have the option to apply it in order to generate slightly smaller ranges, or you can choose not to apply it, and then you would be left with this initial bearish internal range. Now, the application of the FTC model is an exclusive video that I have up on my Patreon as part of the CTFX Premium membership, so definitely feel free to join that and check it out if you'd like. But having applied our FTC model in this area, we now have a scenario where our internal is bullish and we're waiting for the establishment of our new internal range. The internal price action that we're talking about here now is going to be our 15-minute structure. Now, depending on price delivery, as we go into this next week, there's a couple of different things that we can see playing out. As price action is now interacting with this 4-hour supply, which sat at the extreme of the initial bearish range, that internal pullback could potentially originate from this area. And depending on how deep that internal pullback is, we could potentially see price action coming in to mitigate this 4-hour demand or this 4-hour demand before a potential resumption of internal bullishness to target this daily supply. And once we have seen the mitigation of that daily supply, we would then be anticipating that this daily supply zone could then facilitate an overall resumption of our 4-hour bearishness down towards our 4-hour week low. It is important to remember though that if we are to see our 4-hour internal range look something like this, and if we are to have a pullback into here and a break to the upside, for example, this would then become the location of our new 4-hour internal strong low, because that would be then the low which generated this new break to the upside. And the confirmation of our bearish continuation would only truly be obtained once this 4-hour strong low is violated, because we're looking at that relationship between internal and external structure, right? Because our internal structure comes together to facilitate our external. However, we don't need to wait for our internal structure to shift bearish first before potentially looking for potential opportunities, because as this daily supply zone is our major area of interest, where we are anticipating a possible resumption of 4-hour bearishness, we can see that within that daily supply zone, we have a refined 4-hour supply which sits at the extreme of that daily POI. And what this offers us, it offers us the opportunity to trade that POI directly by placing a limit order either at the open or at the midpoint of the POI, making sure that our stop loss covers this high in here, and then we would be looking to target initially any internal swing points that we have in here on our way down, but then ultimately looking to trade all the way down towards our weekly week low. Remember, this is based off of you being a intraday trader. If you are a position trader or a swing trader, you're looking at this daily supply zone and you're viewing it as potential liquidity and potential inducement for the larger weekly zone up here. And that's why this area just in general is a very interesting area that we want to be keeping an eye on. And so for the rest of July 2024, next immediate area of interest is going to be this daily supply zone for reasons that we've just discussed, depending on how price action interacts with that POI and depending on whether it holds or not. We would then look towards our weekly supply zone here as being our next area of interest, where we are likely to see a resumption of our current overall bearishness. But one thing that we can see is that our weekly time frame is pointing bearish. We can see that our daily time frame is pointing bearish, and we can also see that our 4-hour time frame is pointing bearish. It's now just a case of looking at areas where we can potentially get involved in sells. And this is the process I adopt on every single pair on my watch list, every single day, every single trading week. It's all about establishing a directional bias and then looking for those potentially high probability areas where you can get involved in the trade. Now, if you guys found this video helpful, informative, or entertaining, definitely feel free to hit that like button. Subscribe to the channel so you don't miss out on any future content. As always, I appreciate you guys so much for watching, and I'll speak to you in the next one.